This video is being recorded on Thursday, August 3rd, 2023. Thank you so much for joining me today. In this video, just going to take a quick look at the monthly charts for gold and silver, and just this chart right here. And as we get into it, we'll start here with gold, and here you can see because of the rollover in the contract, this has the way charting platforms have looked at this, they've switched over to the December contract, and they have not. So they're not looking at, or at least these few candles are not looking at the spot market anymore. So the spot market here at the end of July closed around 1962, 63. So it didn't close at 2000, so that would be down here. And then this shows 1975. Today we're trading around 1932, but big picture on the monthly chart, 2000, that remains significant resistance moving forward. So gold has to make a monthly close above 2000. A strong monthly close above 2000 would signal that major breakout. But again, closed last month at 1962 or thereabouts, trading at 1932 now. And so you do have monthly support here at 1900. So gold could potentially threaten that over the coming weeks. And so if you get a weekly close below 1900, that raises the odds of a monthly close below that. And aside from the weekly and monthly close, the important thing to note is you have all these long-term moving averages are coming into play. You can see right here, 1840, 1864. I haven't looked at the 200-day, but I'm guessing it's probably up there in the 1860s. So the mid-1800s, that's the next significant support. And, this band of long-term moving averages, I mean, you could throw on a few more. I've talked about in other videos. The market held support right here, and that's, of course, when it really got going, thanks to the Fed cutting rates. So the market did hold support here, wasn't able to, failed to break out here. And so we'll see if it comes down and tests, test these moving averages here. And, if it successfully tests these moving averages and then you get a rebound, back up towards 2000, that would be really, really bullish. If the market comes down and tests that, we'll see how it fares. If gold is going to come down, what could that mean for silver? A lot of people have been drawing these trend lines, from here, and you got to be careful about that. Trend lines are, I could do another whole video on trend lines, but so I'm not a fan of that analysis. It hasn't been panning out. People have been seeing silver go up and calling a breakout, but look at the monthly chart here. I mean, obviously 27, 28, going back here, that's an important level. But look at this right here, which is in the high 25. So high 25s, if you look at a weekly, 26 is significant weekly support. So silver has not, I'd have to throw up the weekly chart, but, maybe it's only closed above 26 on a weekly basis one or two times in this whole period. But look, it's never on a monthly basis closed at 26. I mean, that's going back, almost 2 years. So, the high 25s are just 26.00 on a monthly basis. That's clear. I mean, you could say, well, this is kind of a inverse head and shoulder. I mean, it looks like it, but it's kind of sloppy. And, well, I guess if it's not sloppy, I mean, the market can tell us, but, right now, I'm just doubting that the next move is going to be a breakout here and going to, 27, 28. I mean, if that doesn't happen, you have to respect the possibility, especially if gold comes down and tests here. You could have silver coming down, possibly testing this blue line, which, is right about 21. So, 22 is also good support if we're looking at, I believe, the weekly chart and some long-term daily charts. But looking at the monthly and quarterly, I mean, you can see this is right around 21. So right around 21, really significant long-term support and not that far away. I mean, from where silver is right now, I think silver is even lower than that because this is delayed. But again, I mean, I'm leaning towards that. But if I'm wrong, you could see silver bust above 25, make a monthly close. Then you get, at that point, it's probably going to test 27, 28. And if that were to happen, what does that mean for gold? Well, maybe gold could climb back and actually make an attempt at a breakout. We haven't done, we did do a macro video, I think a couple of days ago. And so obviously the yield curve starting to steepen. It looks like an inflationary steepener because long-term bond yields are starting to move and break out. But here and now, the immediate part of that does not look like it's bullish for precious metals. Obviously the dollar is rallying alongside of that, so that's adding some pressure. So, at some point, if you get the 10-year yield, making a really strong rise, and you get a rebound and concerns about inflation, all that sort of thing, maybe that can pull up gold and silver to some degree. But here and now, the technicals, especially if you look at the miners right now, and then looking at these monthly charts, I mean, it's hard to say, but they show that this market, there's a threat that it could move lower over the weeks and months ahead. So we'll see. I mean, it's a very difficult macro environment, very difficult to predict. I do think we're going to get a recession at some point in the next, maybe 6 to 12 months or 9 to 12 months, something like that, and that's going to be a major catalyst for precious metals. But that aside, here, looking at these monthly charts, unfortunately, it doesn't look to me like it's a threat to break out either one in the next couple months. Really hope I'm wrong about that, but that's how I see it right now. Let me know what you think. Leave a comment. Thank you so much, and I'll talk to you guys again in the next video.